Yeah, I know. Okay.
Shall we start?
Yeah. Before we could get started with the terms or our discussion, firstly, I want to commend you on the kind of excellent job that you're doing. Not only just being a support in terms of being a venture capital firm, you added great value to aerospace industry, and yeah, the kind of dedication you have towards your portfolio companies is really commendable. So regardless of what the deal or the terms is, I'm sure the kind of respect you've earned is already gaining you good name. So I thought I'll tell you about our company also. You must be aware, but yeah, we are the one of the very few and the only people who launched reusable launch vehicle and poised to make it big in this field, as you're already aware. So I look forward to having this discussion with you.
My pleasure. Thank you for the good words
Yeah,
for kicking off
yeah.
the
You're
conversation.
welcome.
I think we have met severally before, so
Right,
I'm excited that our meeting has culminated to this final conversation,
right,
where today we're going to talk about the term sheet, and I think it's a great opportunity for you to give us the platform to discuss a potential investment opportunity with you.
right.
It's going to be our first time investing in the aerospace industry, and we're really curious to understand what the dynamics are. We've done a little bit of our research, but go ahead and tell me more about.
Oh, right. Is this the first time you're investing in aerospace industry? Because
Yes.
we are aware that you've already done great in the field of working with.
Do you want to pause a little bit and just confirm that?
Yeah, no, I mean, you can let that. I mean, let it be rolled. No problem.
Okay.
You can say. I mean, yeah,
Yeah.
no problem. Go ahead.
Okay. So this is going to be our first portfolio company in the aerospace industry. Um, and we are excited to be discussing this today. So, I mean, very fast forward to our reason for meeting today. Um, the last time we have spoken over the several meetings, I think we
Right.
have discussed some of what I want, and you've also given me an opportunity, to give me your side of the conversation. And today, coming back to you, after doing some research on the opportunity and based on the market research, because you're a young company and we are really excited about the potential
Right.
that your company is going to do, especially in revolutionizing space travels,
Right.
especially as you aim to open it up to the public.
Right.
I think it's a very incredible business model, and we couldn't be more excited to partner with you on this.
Right.
But first forward, I'm aware you do not have evaluation of the company as we speak, but we have done our research and relative valuation from other companies that's shown us that we can ask for a certain stake as a venture capitalist. We definitely want to have some control and some exciting investment. We right now we are proposing to you $100 million.
Right.
And do you want to tell us how you plan to utilize that and what stake there are that you want to give up
Okay.
in
So
exchange for the $100 million that we have on the table today?
right.
What percentage of equity in your company, and just give me a general idea of what the value of the company is right now,
Right.
and so we can discuss about what equity stake my investment will be worth. Yeah, because it's still a startup, and we can then take the conversation from there.
Right.
Yeah.
So as talking about equity stake,
Yeah.
sure we could discuss that and the fact that you've taken an interest in our field.
Yeah.
So firstly, about the valuation, there are lots of ways to value a company.
Yeah.
So as this has just finished its first stage of research and development and finished has its own fleet of 6 vehicles. All that is left is the actual entering uh, of our company into the space trip, or what we call is Earth Escape.
Yeah.
So yeah, so we'll be completing the entire thing in 2 hours, so that the public will get an experience of how it is to travel to space, experience weight loss, or that laws of gravity, and a view of Earth from the space.
Yeah.
And all this will be done in 2 hours. So, talking about equity percentage, we have done detailed revenue projections and comparisons
Mhm.
as we've seen all that. But yeah, the fact that you're proposing to have a specific equity percentage, well, we do understand as venture capitalists, you would want some sort of equity in our firm. So I would propose uh, 18%. Yeah, 18% of the of equity for the kind of, yeah, for the investment that you make. So probably we could first discuss equity percentage and then move on to the other terms like slowly, one by one.
Yeah, yeah,
Yeah,
fantastic. So, I
yeah,
mean, I think, as a standard, we should talk about the equity percentage when we know
right,
the value of the company. And so
right.
I'll start by discussing the company
Equity.
valuation.
Mm-hmm.
So based on the financials that you presented to me,
Mm-hmm.
the three different scenarios of,
Mm-hmm.
you know, extremely aggressive
Right.
projections and stuff, we did our own projections of the next couple of years and then discounted the cash flow back to today.
Okay.
And then from our valuation, we have a certain um, amount of work that you can assign to your company. So I was just wondering if you have done the same from your end, but it doesn't seem like.
No, we do. We do have
So do you?
done it, but yeah, if we consider the investment valuation, probably yeah, from the revenue projections
Yeah.
and comparisons to other aerospace company, uh, we would estimate the value somewhere at 300 million.
Okay.
So if you can tell us the kind of value, I mean, I'm sure if you've based it on our projections,
Yeah.
should be somewhere more or less at 300, because these are facts.
Okay.
Here, there is nothing to,
Yeah.
because we need to be as transparent as possible.
Thank you.
So,
Yeah, so my calculations give me a valuation of between maximum of $200 million.
okay.
And for my $100 million,
Mm-hmm.
that's pretty much half of the value of the company as we speak.
Mm-hmm.
And you know, this is a very risky investment. We're
Right.
trying to invest in a space where the technology you're using has not been proven yet.
Mm-hmm.
But that aside, I think it's a very incredible business model, and then for that valuation of $200 million, and you know, we invest in 100 million in it, we probably, I don't know how much stake you'd be willing to give,
Mm-hmm.
but I would argue for 70% stake.
Okay, that'll, yeah. Beside, I would like to elaborate on that.
Yeah.
Your valuation of 200 million, I'm not sure about after considering which approach, because even our evaluation says at least like it should be somewhere around 300 million, regardless of how we get it valuated from outsiders.
Mhm.
Uh, these are all based on projections.
Okay.
So there is certainly a potential, great potential that we believe. And even if we take the valuation of the current valuation of $300 million,
Yeah.
we still believe that it could do more than that. But 300 is a great valuation of the company. That's
Okay.
what we would say.
Okay.
It's certainly not bad. And on top of that, this is just based on projections.
Yeah.
So we certainly believe that it is much more than that. But yeah, 300 is certainly a good figure. That's what we believe of the thing.
Yeah.
Talking about the equity percentage, I think we are pretty much expecting at least like 10 times multiple of 10 return on your investment in 5 years if it develops as planned, or maybe even better. So that's the reason why, one of the reasons why we are proposing somewhere around 18% is to ensure. No, I mean, there's no compulsion, but I really get your viewpoint. That's the whole point. Like we thought we'll discuss and sort it out.
Yeah.
But yeah, we could certainly discuss on that. But yeah, I would say honestly say it's. I mean, it's again subjective.
Yeah.
So I would propose 18%, but 70% would be a really. I would like to be very transparent before it would be certainly not be possible. So
Yeah.
yeah,
So I
but
mean,
that doesn't harm any sort of respect or anything that I have on your the kind of job you're doing. But
yeah.
it certainly is a no, or that's like
I'd be curious to know if you have um, shared with any other VC, some of what we have. I just wanted us to be clear from the onset that, as we discussed this term sheet,
uh-huh.
that we kind of just sign an undisclosure agreement and that you do not use this document like to share with any other VC, and for the same reasons, I will not share, the proposal I'm sharing with you with, a potential investee.
Mhm.
So, do you want to share if there's any other
Mhm.
investor that you're talking to?
Okay, so talking about that agreement, I thought first we'll finalize on the equity percentage,
Yeah, yeah.
and
I
when
mean,
we get to that, but
yeah,
besides that, there are certain companies that are interested,
yeah.
but we are binded not to disclose
Okay,
or talk more about that.
okay.
It's not like a compulsion, but it's just the usual ethical way of discussing things.
I
That
get that.
said,
Yeah,
we certainly look forward to working with you in case this thing happens.
definitely. I get that part,
But yeah,
and really my concern was, just the same way you're handling the disclosure part with the other investors. I just wanted to make sure the same applies here.
right.
Yeah, but coming back to the issue on the table today, I think we are discussing a very potentially exciting investment opportunity.
Mhm.
Just to hear from you, what is your understanding of my interest, as an investor today, or my concerns? Because I, by proposing 70%, I don't want to
Mhm.
sound like I'm really pushing into taking a majority stake in your company,
Mhm.
but just in your own words, I'd be curious to know how you understand my
Right.
position. As,
So, as you're aware of this company that I quit my corporate job about 5 years ago, and we've done everything to make this company grow,
yeah,
and we feel giving too much stake would not be fair to the already existing equity holders or the already existing stakeholders.
okay,
That said, we are in no way objecting to that because if someone's investing, they have every right to get a share.
yeah,
But I can certainly look it up if I can calculate some more percentage. I mean, because I proposed 18% after taking into this consideration, and this is one of the most important parts for us, not to let the other stakeholders down and give if I can add some later. Okay. So I understand if you're insisting on this part saying VC equity percentage you need, I would be more than happy to give you about if I can add. This is after because certainly I need to balance. So yeah, 26%. Yeah, yeah, 26% is a good figure for us, but we would ideally prefer 18. But yeah, because this is certainly crucial for us. But I would like to know what your views on that. I wouldn't ask why you want stake or something because being a venture capital firm, you can certainly ask. You don't need a reason,
yeah.
but yeah,
Yeah, I mean, I really get your position, but I think in terms of equity allocation in any company as a VC or as a private equity investor, um, the equity stake is pro- primarily driven by the valuation of the company.
Right.
And as long as we're on the same page on the valuation, the amount of percentage that you give me is definitely driven by the numbers. So if I'm going to invest $100 million in a $300 million valuation,
Right.
then definitely my equity percentage comes automatically. And if we look at the projections and the projected returns. But that said, I think to take this conversation forward, I think it's not just about the percentage of equity that
Yeah,
we want,
there are
but I
lots
think
of
there are a
other
lot of
points as well. Yeah.
other interests that we would be excited to discuss with you
Right.
today. And probably I would suggest that you go first and like what pieces of interest have you put together that you want us to go over, and then I can come back to you immediately with kind of how we see our position in this investment going forward.
Right. So that's the reason why I proposed 26% from 18%.
Okay.
And this having said that there were initial investors who created the entire, because of whom the company's potential is now great in the initial stages. That said, we can't dismiss 100 million. We would need. That's why we are seeking our venture capital firms to do that. So I would say certainly say 26%. But I would like you. I mean,
Are
you
you
to.
cash flow positive?
Yes. I mean, from the projections that we've given, because I don't have the data about cash flow, but if only if the cash flow is positive, the valuation will be more than the investment. If it's negative, as far as my accounting knowledge is concerned, yeah, because we haven't been given any information here of cash flow or something.
Okay, so because my information tells me that the reason you are raising this fund is to turn around the company so you can be cash flow positive. Right now, you're not meeting your cash flow obligations, and that is one of the primary reasons why you want to raise this fund. But
I would like to clear that. I mean, if you have, because in no way it's mentioned here,
yeah, okay.
but we haven't even started the actual operations or entering into the commercial operations as of yet.
Yeah, but you have
But
been doing the pilot, like the private
right,
space travels, and
right,
right now you're raising funds to go to open it up to the public. So you want to
right,
put up a facility
right,
that it can accommodate the projected
right,
demand.
right. And I can certainly tell you this can take off immediately because we already have the SLVs ready.
Okay.
So
What are SLVs?
Special launch vehicle
Okay.
that are to be that is used to carry the
Yeah.
customers,
Yeah.
and they'll be astronauts, and the brand image for that would be huge, and it's like a we are the mavericks in that field. So if this comes into fruition, yeah, it has great potential.
Is there anything else you want to propose before I can put forward my requests?
Sure. I mean, if we can go step by step, if you're okay with that.
Yeah.
But I would certainly, yeah, first finalize on the equity percentages because I'm pretty much sure like the other provisions, this takes the highest importance,
Okay.
and if we could decide on this, I'm sure it's not that we wouldn't have differences in the other points, but yeah, if we could first finalize on this, I mean, again, up to you, but it's mutual.
Yeah, I mean, I probably would assume that's on my side now to give you what I want.
Right.
Yeah, so first of all, from my position, I'm looking to get returns on my $100 million investment. You understand this is a very risky investment that we are getting ourselves into. And that said, this is the first investment in a space that the technology has not yet been proven.
Okay.
We do not have any records of like your previous management records, and just to give us confidence in how your management will be able to handle this turnaround.
Okay.
And then from our previous discussion, we have talked about the possibility of getting a professional CEO to come and take over from you. Then that seemed like something you didn't want. So on as a venture capitalist, our intention is not to just give you or the entrepreneur money,
Right.
but our intention is to grow the company.
Right.
If you really understand how the business model for VCs work, it's based on reputation. So if we can identify the best entrepreneur and invest and provide our technical experience and knowledge based on all the industry experience we have gathered over time, then we are going to attract more investments into the fund and definitely also attract the best entrepreneurs because that's how the industry works.
Right.
We accelerate the best entrepreneurs, you succeed, we get the best entrepreneurs referred probably through you, through our network of other VCs or through the lawyers that we work with, and then we also get the best investors to invest into the fund.
Right.
And so um, that said, because we are engaging in a risky portfolio, we definitely want to have a majority shareholding. And majority in context means about 51% in any scenario. But we are also, in our understanding, treating this as you, the company, and as the VC. So if there are other investors involved, we are not aware of them, and we'd really love that you reveal to us like the company's capitalization table, so we can see how many capital rounds you have raised and how many people have different equity stakes in your company.
Sure.
But for this discussion, we will just say um, it is what you and your team own as one and
Right.
versus us. And so if it's on a scale of 1 to 100, we by majority shareholding that we're asking for, it's definitely above. Whoever has above 50, 51 onwards has the majority, and whoever has 49
Right.
has the minority. So we are looking at the majority, but that will depend on the valuation. And also, in terms of our in terms of our investment, like the kind of share structure we are looking for, we are looking for preferred stock, redeemable preferred stock.
Okay.
We are also looking for definitely, it comes naturally that once we have a majority shareholding in any company, we get a board seat. So we will recruit people to bring onto the board to kind of reinvigorate the team and bring different expertise and perspective that should drive this business forward. And I think we are on in this together. We just want to grow the business, and we also will want to receive dividends on the equity that we will have in your company. Like we said, we are turning around the company from a negative cash flow to a positive cash flow. And so once we raise funds in the future, again, maybe in the second round or the third round, this being the first round, we will, when you're declaring dividends, we'd like to to have preferred dividends. Finally, and I think we uh, feel free to interject and to also come back to me with your proposals. But we also need some clarification on the term sheet on anti-dilution grounds. For example, when we are going to raise funds in the second round after this, definitely when you bring in more investors and more money that the other investors bring in the next round, you have to issue shares. So
Right.
when you issue shares, there are going to be a lot more shares than we have right now.
Right.
So say if we say we have 1,000 shares in the company right now, you do a second round, you're going to have 10,000 shares. So our 1,000 shares is just going to be a small fraction of the overall number of shares in the company. And so by that is what our industry says we're going to get diluted. So that means our ownership stake in the company is going to go down. We're
Okay.
going to lose the board seat sometimes, and our voting rights in the board is going to go down because we need to have a majority voting or majority equity stake and stuff like those complex issues arise. And so our intention today is to elaborate on the anti-dilution rights, which
Okay.
means whenever you're going to raise the second round after this, we're going to have the priority first to buy
Okay.
to buy the shares that you're going to issue
Okay.
before you invite any other party that is not in this discussion to buy to put in money in the second round.
Okay.
Lastly, it's the other thing we want to talk about is about the no-show provision, which means the timesheet that we're talking about today should not be shared with other venture capitalists or any kind of investor that you're talking to or who are interested in you. And we shall also not do the same. And also, finally, and I think this is also very important for both us and for you, you shared with me three scenarios of how you see the company growing,
Right.
like three projection scenarios. So I think you had a certain one, medium one, and a very aggressive uh, projection. So based on our valuation, we used the aggressive projection. It's only through the aggressive revenue projections which you gave us that the company will be able to be cash flow positive.
Okay.
Otherwise, this investment is still going to sink if you go with the current pace that we have, or go with the medium term phase. So pace. So I mean, it would be important for us to get some clarity on your plans
Sure.
about
All
implementing
these
the
points.
aggressive projection. I hope you are taking notes, but I'm happy to highlight them one word for word. Um, and just to know what your interests are so we can.
Sure. So to address each of your concerns, we are not really given anything here about the negative cash flow, but we are only told about the positive things, about what kind of potential here it is.
Okay.
I'm not sure how you got the feeling that this is a risky investment, but you have every reason why, just to consider all the risks involved.
Yeah.
But we do feel it's certainly going to work well. That said, yeah, that is one of your concerns. And about anti-dilution rights, we could figure a way out. Certainly, if we are getting you on board as a venture capitalist firm,
Yeah.
we could certainly, in case we agree on other parts, we could consider on certainly giving you the first right of refusal. I mean, if you're interested, certainly you're the ones who could. Yeah, we wouldn't want others to take stakes directly. First right of refusal will be yours. We can figure that way out, or I'm even proposing that. I mean, agreeing for that. I mean, because in case we get this on board, but that said, with regard to the revenue projections, I think. The aggressive approach is a good way to take things, but there are a lot of other factors that are involved in the market, certain things that are not under our control. So I would certainly prefer, I wouldn't want to give false promises and say that, promise out of the world things or something like that. But we would certainly stick to conservative approach and aggressive would be I would definitely say a no. Besides that, talking about type of stock, we would certainly prefer common stock because it will be unfair the ones who are already there. That said, if at all if we get you on board, convertible preferred could be considered certainly. I mean, you would still be preference shareholders. That's convertible preferred, but redeemable preferred for a company that is at its nascent stage. I'm pretty sure the existing management and board and uh, everyone would feel unfair, and our view is that it's not really okay for us. So I'm trying to be as transparent as possible so that we look forward to this relationship. Besides besides whether there's a deal or not.
Yeah.
And talking about equity percentage, certainly a majority would be a no, because for us the fact that we are even pushing it to 26, or I could even push more, but more the majority is certainly is no, it's a clear no. That's a deal breaker for us. And the other things, dividends, we can have a word about it as to how to go about it when we finalize on the major points like equity percentage and the type of stock, or if the other important terms we agree upon.
Yeah.
we could discuss how to go about dividends. But yeah, but still, we would pitch for no dividends. That said, we are certainly open for more. I mean, more discussion as yeah. So yeah, majority stakeholder is it's a no for us, and yeah. And talking about board members, as of now, we have two independent board members, and the other board member is me. So we would again to create the right balance. We would definitely welcome a board member for you from your side if you're looking forward to more than one or many more board members. We would feel it's the management or the board of directors wouldn't be balanced. So
Wait, you already have two board members.
no, we have just
Oh,
one board member and two independent directors. So independent directors are someone who
okay.
has, I mean, someone who shouldn't have any conflict of interest or some outsiders.
Okay.
So to create that right balance, certainly a board member from your side is welcome,
Okay.
but more than that would be difficult.
Do you welcome independent directors from our side?
I mean, independent directors would be okay. I mean, probably one independent director
Okay.
and
You
one
already
from your side.
you already have two, right?
Yeah, but that is not from, I mean, independent directors, whether it's from our side or your side,
Okay.
regardless of that. And another thing, we believe too many people in the board wouldn't make a great. So far, the fact that it's been successful is because we feel we've had good discussions. But before talking all this, yeah, I'm sure equity percentage would be a deal breaker.
Yeah.
So if we could finalize on that,
So I think an interesting angle to the equity percentage and something that I didn't talk about
uh
is about you as the founder's stock option plan. And this is where, as a CEO, the company does not have enough money to pay you well. And it's not just about the company, but it's a general industry trend to pay to give the CEOs and employees the option to buy stock from the company at a much lower price now, and you can redeem them later.
Okay.
And that's called the stock option plan. And so when thinking about it, that's also something we want to offer you. That even in this shareholding, you put aside some shares which are option pool for for employees to buy shares from that pool, but also for that pool, we are going to introduce an interesting element which is called vesting. So vesting of the I don't remember from my finance class what vesting really means. Um, vesting is not vesting. We will edit that part of the video. But yeah, long story short, there is going to be vesting of your shares of stock, which means they're going to be safe. Whether you are the CEO or whether you move to the board or whether whatever happens, as long as you're with the organization, your shares in the stock will not be diluted. And also, I also wanted to propose like, um, because I really understand the passion with which you are driving this company, um, and the idea of bringing in an external party is not something you're looking forward to, but I think just to reinforce our initial position of really wanting to grow this company with the aggressive projections, one thing we request is that we develop benchmarks which are based on the revenue projections that you share. And so these benchmarks will be what we will be evaluating the investment based on. So we put milestones based on these benchmarks, and that's kind of how we will evaluate. We will revisit those benchmarks after some time to see whether the discussion of having another CEO is something you might want to consider. But that doesn't mean we're getting rid of you. I think we really like you, and the whole industry really likes your innovativeness,
Mm-hmm.
and I think it really takes courage and strength to get into this a space that
Mm-hmm.
nobody else has ventured in before. So I think
Mm-hmm.
you're the right person to do this.
Mm-hmm.
But just to make it clear that we really value those performance benchmarks.
Mm-hmm.
Um, and also um, we also request that we need to have a right to exclusive negotiations with you for at least 60 days
Mm-hmm.
before the no-shop provision expires.
Mm-hmm.
Um, so, and on top of that, if in case, I don't know, I would say that
Mm-hmm.
if you still want to be receiving other offers from other venture capital funds, I think it would be great that you disclose that to us if you were in
Mm-hmm.
discussion with others so we can make a decision.
Mm-hmm.
But also, um, I don't know if you, I don't know what you think of right now, but we have $100 million for you
Right.
from our from our records.
Mm-hmm.
You have invested a total of $26 million. So, in other words, we're giving you almost 5 times the total amount of money you invested in this company from the beginning.
Mm-hmm.
So, this is up to you to think
Mm-hmm.
about it.
Mm-hmm.
And ideally to raise like 5 times
Mm-hmm.
your own founder's total investment over time in one round from one venture capital,
Mm-hmm.
and to give the 26% stake that you are proposing.
Mm-hmm.
I would say it doesn't make economic sense
Mm-hmm.
from a venture capital
Mm-hmm.
perspective.
Mm-hmm.
And I really don't want to go into the details of how the venture capital firms make money and how we raise money and how
Right.
but you also are probably aware based on the multiple meetings we've had and on your own research about
Mm-hmm.
before you made the decision to raise money from a VC.
Mm-hmm.
I think you should have known that we invest in more than 10 and only 1 in 10 investments succeed for a VC.
Mm-hmm.
So this is one of the bases upon which we're saying we are making a very, very risky investment in your company,
Mm-hmm.
and also to rationalize our assumption that this is risky.
Mm-hmm.
I'm repeating again that the technology you're using
Mm-hmm.
is unique to you. It
Mm-hmm.
has not been proven. Even
Mm-hmm.
if you go commercial, we're not sure if it's going to sustain
Mm-hmm.
the demand, or
Mm-hmm.
they're going to be
Mm-hmm.
need to revamp the technology, and that might
Mm-hmm.
require more investment. So
Mm-hmm.
we are not sure about that. We're not saying it's bad. It's a new
Yeah.
space. Everything is new, and we're
Yeah.
gonna have to approach it the new way.
Mm-hmm.
Um, what's your feeling about that position so far? So I mean, we
Well,
have
I totally respect your views. You
yeah,
have you're entitled to your views, and I appreciate that you were very honest and open about it. So yeah, with regard to equity percentage, I would say if at all, if you're okay, I would say a maximum of 40%, but that's a deal breaker. If we can't go over 40%, if that's a no,
yeah,
it's a no. I mean, we don't intend
yeah,
to compel
yeah,
each other or
yeah,
something like that. With
yeah,
regard to the other things, I mean, we would go over that if we first like go over this crucial point of equity percentage.
yeah.
But if that's a deal breaker for us, but if we are not open to options of you having 40% or less,
Yeah,
I think we don't have a deal. But
yeah,
that
yeah,
said, we certainly look forward to any good relationship with you in the future.
exactly. I think we are really excited about what you're doing in this industry,
Mm-hmm.
and you're actually making dreams of many people come true.
Mm-hmm.
Going to space was just the astronaut's
Mm-hmm.
job. Right now, you're
Right.
making this possible to the public in
Mm-hmm.
2 hours. I mean,
Right.
nobody has. This is just phenomenal.
Mm-hmm.
But that said, um, I think the equity percentage that you're proposing,
Mm-hmm.
like I said, our valuation,
Mm-hmm.
we valued your company
Mm-hmm.
between 150 million
Mm-hmm.
200 million.
Okay.
That's the, actually 200 million is the highest,
Mm-hmm.
very a very
Mm-hmm.
a very high valuation.
Mm-hmm.
Um, but I think we really also should think about what that extra element
Mm-hmm.
that as a VC we are bringing to your firm
Mm-hmm.
outside of the money.
Right.
Otherwise, I think there are very many ways we can raise
Mhm.
money. I think you have considered all these alternatives. You can go for private equity. VC is private equity, but you can go for individual investors.
Right.
You can get
Well, we are really aware of the
yeah. I mean,
kind
there are
of
many
expertise or the kind of good job you've been doing in helping companies and
we are going
especially
to
the
open up
aerospace.
our networks too.
Yeah, yeah. Certainly, that's the whole
We're
point
bringing
why.
on advisors to your board, so you're definitely
Right.
taking off the pressure of the thinking of how you're going to grow the farm, how to because you're not going to exist in a silo. When you go public, you're going to have
Mhm.
to open up your networks.
Certainly.
You have to integrate some of your services with other private
Mhm.
sector players like government. You
Mhm.
cannot go to space without certain accreditations,
Right.
and the networks you're opening up to you are just worth millions of money. So I mean, when you
Right.
think about it, I mean,
Mhm.
and so really that's exactly what I want us to emphasize, but also because you're very passionate about this, and in all due respect, like I say, it takes a lot of commitment. Um, at, at the end of this meeting, really what I want us to do is just shake hands and say we're going to do this together. That is what we have always existed for. Um, that said, I'm not sure if the 40% stake you're talking about even can suffice. Um, Given $100 million investment, the least we can accept is a 60% stake. Otherwise, it's going to be a super negative investment for us. We're going to lose, and we're actually taking this risk to lose just a minimum based on our risk appetite. And by taking 60, we are losing just minimum amount of investment. But we are looking at it in the long term. When you open it up to the public, when public can now access your services, you're actually on your path to going to raising more revenues, and you probably can go public and
Right.
do an IPO when the public is already aware about your services. So I think really I encourage you to just think beyond the investment we are talking about right now.
Right.
And
We certainly appreciate your views and your taking time to explain all
yeah,
of these things.
yeah,
The very fact that you took interest in this, in fact, we were certainly looking forward, and we still are.
yeah,
The very fact, the purpose that we came here to discuss the terms, we've not done this with the others that have shown interest in our firm
yeah.
because of the kind of amazing work you've been doing. That said, I respect your views, but we do have different views about our company.
Yeah.
While you feel risky, we are very positive about our company.
Okay.
That said, we truly believe, as any CEO would, taking the aggressive approach would put more pressure, or that would be like working for the sake of benchmarks. Then, but that said, we believe the company would certainly grow very well,
Yeah.
but we wouldn't want this to be a barrier for us while we do well in the market.
Okay.
So certainly, with regard to voting rights, this as a team, I'm pretty sure the stakeholders that have been there from the beginning, it wouldn't be fair if we go beyond this. So 40% is certainly a big thing for us, and it's not just about one person because it's a lot of hard work from 5 years, and we are very positive about this. But yeah, it's certainly more than 40% is a no for us,
Okay.
and yeah, that's about it. And board members, we are very sure that we wouldn't be. I mean, we appreciate that you have expertise and bringing great views, we would certainly welcome that. But the kind of feeling that we have is now we want restricted number of members in the board. So in order to create right balance, too, there are two independent directors. One being, I mean, besides these two independent directors, I'm a director. So one from venture capital, that's the one who would be investing. One from that would be fair. But if that person proposes to bring another independent director, it should be fine because regardless of independent directors are independent.
Yeah.
But if it exceeds these many, it's that's again important for us because I would want to be as transparent as possible. It's not just about me. After consulting all the stakeholders and I represent the entire team.
I get that.
So that's the whole point. I'm trying to be as transparent, just like how you were very honest with your views.
Yeah.
But yeah,
one last question. I mean, do you have any ideas on how you can resolve this majority equity investment discontent?
right,
Yeah, I mean, the bone of contention here is about the stake or
right,
the equity in your company. Do
right.
you have any ideas how we can resolve this?
Well, certainly, the whole point in making sure that we have fair amount of equity shares so that none of us feel that we have forced each other or compelled each other. That's the whole point why we went from 18%. This is the crucial point for us.
Yeah.
So from 18% to 40% is a huge jump.
Yes.
Because I was clearly, I mean, after consulting all my team, this is something that's important to us. It's a crucial role for us.
Yeah.
But that said, to respect the fact that you're taking interest in this, that's the whole point in jumping this. But I need to be honest about this.
Okay.
More than 40% wouldn't be fair,
Okay.
and I wouldn't want to compel you to agree with something you're not happy about.
Yeah.
But it would be a great opportunity to have someone prestigious or a firm like yours investing. But if this doesn't work out, certainly we would be looking forward to a good relationship in the future.
Of course.
Yeah.
Is there any other trade-off that you can make at this point? Like, I know your interests, you now know all my interests.
Right.
And I think we have all this common
Right.
goal of really growing this company and
Right.
maintaining a mutual relationship.
Right.
Is there any other trade-off you want to make? Because I would say we should try to make a deal. If it doesn't, it's okay. But I'm willing to come down a little bit to 58%.
For the voting rights, the
58%
equity percentage. Yeah, I mean that's a clear no.
Oh.
Yeah, I mean 40% is the maximum that we will be.
So can we? You want 40 and I want 60. So
No, I mean we 40 as in I would propose that we have 60% and you have 40%.
oh, okay, yeah.
Yeah.
So we have.
So we
40.
have the majority.
Yeah, I mean,
Yeah.
that part I get. So I'm saying I want 60, you want me to have 40, so I'm just gonna get an average of that. 50, that's still low. So do you want to come? This is this is still low. So I mean, for evaluation, are you willing to work down your evaluation and say we are going to value the company at 110 million for 57% stake?
Well, no, I mean with regard to 50%, I mean you having 57%.
Yes.
No, I mean it's a clear no.
Well, I mean we can work this.
Because certain things we are very have been instructed or have been told that those are extremely important.
So for 150 million valuation, how much stake are you willing to give?
I mean, I didn't get because
Yeah,
the valuation that you're talking about, I think that's been done by your team.
Yeah, I mean,
The valuation that we've been given is 300 million.
okay.
So I'm not really sure how to go for that one.
Okay.
But yeah, if there's something crucial, that would be equity percentage and the board members and the CEO replacement or that benchmarks. I would say the maximum I would yield to is conservative projections, but I would still say there's no provision like that CEO replacement because of the kind of work that I've been put in. But that said, I understand your concerns that you need to bring in somebody else. But to have a benchmark is important for the projection side. But having conservative projections is the maximum that we could yield. And board members certainly not more than one from your side and not more than one from independent. So
Mm.
yeah,
Okay, I think I've given you all my possible options.
and likewise, I think I've been very honest about
Yeah,
my side, not to put you in a place where there's
exactly.
confusion or
Exactly.
yeah.
But do you think you have the authority to like commit if in case we got to an agreement today about the terms of this term sheet with the proposal of 40%? Do you need to go and confirm with the board or?
Yeah, yeah, certainly. I mean, 40% is okay. I mean, 40% stake from uh, your side and 60% of us having it.
Yeah.
That I have the thing. I mean,
But have you considered like just you know selling off the whole company like 100% stake to us, and we can talk about how much
mhm.
you'd be willing to have for that
I mean, 100% stake
of your company and
of my shares.
yes of the entire
So, is planning to sell the company?
yes.
No, that is not in our foresight anytime
Okay.
soon.
Okay.
Yeah.
Yeah, so I mean, I think I've given you all my
Mhm.
options. I really appreciate that you came today, and you can go and sleep over this. Again, just to reiterate, even though we haven't got to an agreement,
Right.
our position is still uh, at least 58% stake for
Okay.
$150 million valuation. You can think about that. We really, really want to do business with you.
Likewise.
Said,
Yeah.
but maybe at this point, um, it's something we still both need to go and digest.
Certainly.
Yeah.
But it was a pleasure
It
having
is.
a
It was for
discussion, and
sure.
I
Yeah.
appreciate you taking
Yeah.
your time for this.
Thank you.
Thank you.
Thank you.
Great. 53.
Oh, how long are we supposed to go? 45.
Nice. Not bad. This is good. I hope it's recorded.